Welcome everybody to the video. So, after about a year and a half of working on the new Studio Web updates, we updated the entire engine from scratch to take into account all the new functionality. We just updated the skins from scratch, Studio Web 5 skins, and we implemented the new Studio Web Store, which has all kinds of capabilities built into it, including couponing and affiliate tracking and all kinds of other good stuff like that. So we spent about a year or so, a year and a half, depending on how you want to look at it, implementing all this stuff. So it is now done. Now at this stage in the business, I'm ready to turn my attention to marketing in a big way, which I haven't been doing for the last year and a half. I do a little bit, but now my focus is going to be there because the application and the products are now all in place after a year and a half. I am fortunate that I'm able to work on this stuff at my own pace because I have the ability to personally finance and bootstrap the development of the business, as I've been doing for many, many years now. I haven't gone for VC funding, although this type of business can be done with VC funding, but it's not absolutely required. I have some friends of mine, they have a business that requires a lot of staff, a lot of people, so it only makes sense in that situation to VC fund. VC is short for venture capital. Why? Because it's easier to strategically spend other people's money than it is to spend your own, right? If I have to drop $100,000 on a certain some developments or something, that's my money. So that's like, I'm much more reluctant to do it, although you have to sometimes. Whereas if you're in a VC funded where everybody's sharing the risk and you got a war chest of $5 or $10 million, then you're able to say, okay, we'll drop that $100,000 just to quickly get that going, because again, it's not personally affecting you in a major way. And that's why the VCs, if the company does well, they get their piece because they've taken risk and risk their money to fast track and finance your business. When would you want to do VC versus bootstrapping? First of all, VC is venture capital, meaning you get a pile of money from investors so they can fast track the development of your business. And bootstrapping is basically pulling yourself up from the bootstraps. It's an old expression, which basically means you fund your own growth. The problem with bootstrapping is that it's much slower. It's much more dangerous because it's your money. The risk is all on you, but you have total control over your business and total ownership. But it's going to be much slower typically because you got to pay your own way and you're taking on all the risk. Is one way better than the other? It depends on the type of business. It depends on your time horizon, how fast you need it to get up. Some businesses you better move quick because the competition is going to come in. Other businesses you can take your time. It really depends. It really depends. There's no one size fit all. There's no solution. There's no simple answers. But generally speaking, I gave you the basic parameters as to when you want to go VC and whatnot. Now, you could start a company and say, okay, at first I'm just going to just build it on my own, get a partner, sweat equity, and you just build it up slowly, spending a little bit of money, just elbow grease it, if you will, do the work. And then if you see you starting to get growth, starting to make money, then you could maybe go out there and get some outside investors at that point, whether it be VCs or other types of investors. Again, when you bring in third-party investors, all of a sudden, you're opening yourself up to scrutiny. You're losing control because, they're putting money into it, so you can't blame them. So there you go. That's the story with that. So you could build up, I forgot a point. So you could start by bootstrapping, build the company to a certain point, and then bring in money. Now, the advantage of that is that when you have a business that's viable, making money, selling product, etc., then all of a sudden you could raise a lot more money for a lot less reduction in your ownership, right? Because every time you raise money from a VC, you got to give them a piece of your company. Now, if your company is already doing $500,000 in sales and you're profitable, you could raise $5 million for much less of a gouge out of your business. Whereas if you have a business and it's not making sales, not profitable, then to get that $5 million is going to cost you a much larger percentage of your business. So you see, you got to play it by ear with these situations. So sometimes it's good to have mentors and advisors there who could help you to make that decision when to go VC, when to go raise money, or when to maybe just borrow money, if you can do that, as opposed to selling off pieces of the business. Anyhow, that's it for this quick little business vlog on this new channel. If you're watching this channel, this is my brand new channel. I just launched it a couple of days ago, February, late February 2020. My main channel is pure code and programming and development, and that has many more subs, of course, over 150,000 subs there. So this is a brand new thing for me. I've been a developer since the 1990s, but I've been in business for a few years longer when I was a developer. And so I think I got something to offer there as well. All right. Thanks for watching. Bye-bye.